over $12,000 per contract to trade coffee right now, which is just crazy. Good afternoon, everyone. Welcome back to the Comstock channel. I am Relph with Comstock Investments. Seems like we have a lot of things going on this week from a news standpoint, announcement standpoint, but the market's pretty lethargic in the grain specifically to end the week here. We'll see how things look to open up next week, and we'll take a look at some of these closes as we are just wrapping up the day while I'm recording this. But wanted to talk first about some of the topics that have been floating around. Early in the week, it was announced that Trump plans to rebuild the beef supply, lower prices of beef, and how are they going to do that? There was immediate speculation and even being reported in some outlets that are fairly reputable that there was expectations of direct payments to producers for heifer retention. That speculation went on for a couple of days and really energized the markets to start the week. But by the time it was all said and done, Brick Rollins makes the announcement in Kansas City yesterday that there will not be direct payments for heifer retention. They are going to focus more on land and risk management. So maybe we're going to see additional ground available for grazing, some of this government ground, things of that nature are kind of expected at this point. Maybe we see improvements to the PRF program, the pasture range land and forage, as well as the big bullet point of the risk management. Does that mean higher subsidies for LRP or livestock gross margin protection, any of those products that are out there available? I doubt that it would get into anything with the futures and options market, but you never know. We'll have to see what they have planned. More announcements are slated to come out next month on that front, at least according to Rollins's public statement from Kansas City yesterday. Additionally, a lot of rhetoric regarding China, regarding their lack of buying in new crop soybeans specifically. And now we know that the tariff situation is having a direct impact on farmers. So they are slated to allocate more money to go to direct farmer payments. We don't know exactly what that means yet, but those stories are being circulated in a big way. Amazingly enough, the grain market's just dead to end the week. We're seeing actually some support levels give way in both corn and soybeans. We're not too far from contract lows in some key contracts in all wheat classes. This just has been a fairly mundane sideways market that is actually favoring the low side from a technical standpoint. We will take a look at a couple of charts here in a minute. The other major bullet point that came out this week is that the administration is launching a DOJ investigation into a couple of highly consolidated input categories that are directly related to farming. And the one that's catching all the attention and, of course, garnering the most headlines is the fertilizer industry. So the DOJ looking at potential unfair business practices in those sectors, that would be a huge win for the U.S. farmer if we could get some kind of transparency and policy implementation to improve these input costs, because that is just a dire situation at this point, especially with current commodity prices. Hopefully something gets done, but man, a lot of talking points this past week, and again, just fairly quiet responses from the market. So I'm going to take a look as we are heading into the last minute of the after session in the grain markets. Right now you have December corn down 4 cents at 421.5. That did break down the 50-day moving average, the 20-day moving average. This is not a good look for the corn. Soybeans not much better, although at least on the positive side here to end the day, up a penny and 3/4 at 10.14. Still lower on the week, and we do have a bear flag formation set up. Right now we've not broken out of it, but it wouldn't take much of a move on Monday to break out. Whether to the top or the bottom side will be the key thing moving forward. Soybean oil was off a little bit as we saw crude palm oil down $11 today. Meal just near steady to a couple dollars higher per ton, and we are carving out new lows for the session as we come into the close. December Kansas City wheat off 6 3/4 at 505.5 at the settlement. And although new lows for the day, we are still a little ways from the contract lows posted at 497.5, but not far enough away for any kind of comfort level. December Chicago wheat down 7 1/4 at 519 3/4 to finish out the week. And again, this will be a higher trade for the week thanks to the rebound that we saw from the new contract low on Tuesday. That low at 507 1/4, so about 12 cents away there. Outside markets were a little chaotic today. Energy sector actually fairly quiet. We had the natural gas off 6 cents currently. Crude oil up 57 at 65.55. The November WTI did post a topside breakout, but could not hold anywhere near the highs. Currently trading about $1 off the highs. but still topside breakout today. If we can close here or higher, that would be the highest close that we've seen since the 1st of August. One of the biggest stories of the day was the metal sector. December gold up $37 per ounce, while December silver is up $1.72 per ounce. That is new highs in both of these markets. That December silver currently trading at $46.83, and you can see here that is a big blowout high, up for 5 of the last 6 sessions, and they've been sharply higher in most cases, today being the broadest of them all. Cattle market finished mostly higher today. Feeders up anywhere from $1.25 to $3. October closes $2.95 higher at $3.57 on the button. This was a 38% retracement of the last 3-day range, looking for some kind of resistance around here for the short term. However, fundamental factors will definitely dictate what happens moving forward. Live cattle were almost steady on the day. October down 25 cents. December was steady. February up 45. The story of the week this week has been the fall off in the cash cattle. We have $5 lower trade in the north, $3 lower in the south, waiting to see what the weighted averages will look like on Monday. But right now you have to suspect that we're going to have something like a $3.50 to $4 drop off on a national weighted average after we've been down for the last several weeks already. 232 live in the north, 235 live in the south. Most dress trade done this week at 365. There were some outliers, some majors only paying 360 and some deals done at those prices, as well as some regionals as high as 368. Definitely some deals done at those prices as well. Equity futures are going to finish firmer here, up 350 in the Dow Jones. The market sentiment continues to just be euphoric in the equity markets, especially on a day when you have the dollar down. But the surprise to me is to see the equities as high as they are on the day, with the metals roaring higher as well. We did not see a big enough drop off in the dollar to warrant that kind of money movement into the metals and equities, but here we are, and that's exactly what's happening. The soft markets were fairly quiet all week, but there was one exception. Coffee has been extremely volatile. We finished today up $6.70, and you can see here over the last 2 weeks, we've traded from a high of 424 to a low of 349.5. This is just unprecedented volatility in this market that has no daily limits, and the current margin requirements for trading coffee reflect the volatility that we're seeing, as we're over $12,000 per contract to trade coffee right now, which is just crazy. Similar to what we saw in cocoa a couple of years ago, all the way as recently as a year ago. Just extreme moves and intraday changes, $20, $30 has not been unheard of. Back to the ag sector, hogs had a really good week. Supportive hog and pig report that gave juice to the market, finishing over $2 higher in several of these contracts. October struggling a little bit, as it is the spot month, currently trading at 101.50. We're about $1 over what had been resistance in a couple of these contracts. December closes the week at 91.05, up for 4 of the 5 sessions this week. So a really nice bounce back from what had been a corrective week the prior week. And I think now it's going to continue to be watching the fundamental factors. Where's the cash trade? What's the cutout doing? And are we going to start seeing a shift from this high price beef to pork that's going to have any kind of meaningful impact to the hog market moving forward? But definitely the lower market ready supplies did juice the market for today. How we enter next week is going to be critical. Can we keep that momentum going, or was most of this data already priced in? That'll be the big question as we start next week's trade in the hogs. So thanks for joining me this afternoon. On behalf of producer Breanne Jenkins, I am Eric Relph with Comstock Investments. We will see you next time right here on the Comstock channel.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.